How's it going, everyone? In this video, we are going to be talking about the open high low close and open low high close of candles. We'll first talk about defining a bearish and bullish candle, and then we will talk about the three different types of candles that I focus on. Let's get into the PDF. So the first thing you need to understand is that every candle has an open, high, low, and close. So for this specific time period, price went, and the highest it reached was up here, making a high. The lowest it went was down here, making a low, and price at the specific time opened right here and closed here. So if the close is below the open, then that is a bearish candle. Now if the open is below the close, that is a bullish candle. Now every single candle has an open, high, low, close, and it is the foundation of trading. Let's talk about the three different types of candles that I focus on. So the first candle I focus on is a directional candle. And what that means is price went one direction throughout this time period for the most part. You can see we had an open, we made a high, and then we continued lower for the majority of this time period before making a low and closing. Similarly, with a bullish candle moving in one direction, we had an open, we made a low, we continued in one direction for most of this time period, made a high, and then closed. So what does this look like on the lower time frames? Well, for a bullish directional candle, we'll have an open, a low, and then we'll continue or trend in one direction to make a high and then close. And the one thing to notice is generally with directional candles, this wick is smaller relative to the body, right? That's how it's going to be. Now with a bearish directional candle, we'll have an open, we'll make a high above that open, then we'll have a continued move down to then close. Once again, a smaller wick relative to the body. Let's hop into TradingView and go over a few examples of this. So here we are in TradingView, and the first candle we're going to take a look at is this one right here. So you can see price opened, made a high, went lower throughout the time period, and then closed here. Since the close is below the open, it is a bearish candle. Now let's go take a look at what this looks like on a lower time frame. So down here on the 15-minute chart, in relation to the daily candle, let's see how it forms. So the first thing we're going to do is go ahead and mark out this opening price here at 1800. So now that we have that marked out, let's play this through and watch how the candle forms. You can see throughout Asia, we kind of accumulate here. We make a high, and then we get displacement down, right? So open, high. Now if this candle is going to continue lower, I'd like to see this high left and to trade lower throughout the day. And you can see we're trading lower. We get New York open. We go even lower. And you can see how this move higher here is just to create the wick of this daily candle. And there, as we close the day, you can see we had an open, we made a high, we went down, we made a low, and then we closed the candle. So you can see every time frame that has a candle, there is a lower time frame making that candle. On the daily, I like to use the 15-minute time frame. Let's go to a few more examples. So now, if we're looking at the daily chart here, once again, and we see that price retch above and then close back inside here, what am I anticipating for the next day? To be bearish. So if I'm bearish, then I want to see what type of candle? Well, an open, high, low, close, because I want to see a one directional move down. So do we get that? We do. So what does this look like on a lower time frame? So you can see here, this was the previous day. Here is the new day open. So we want to see what? Open, high, low, close. And if you notice right here, what do we not have? We have an open. Our high is the exact same price as the open. We don't currently have an upper wick on the daily chart. As we move ahead, did we just create the wick on the daily chart? Well, let's see. And then we get the continuation lower. So you can see open, we made a high, one directional move, make a low, and then close. So let's continue this into the next day. If we're still bearish, what do we want to see? Open, high, low, close. So as we continue this ahead into the New York session, what do we get? We get a move higher, sweeping these previous highs around equilibrium of the previous day, and then displacement lower. So open, high, we'd want to see a move lower to make a low and then close. And here is where I'll use projections or something else to give me a projected move. And you can see it went far beyond that projection, but we made an open high, low. Let's see if we close here or where we go. And we just close right in here. So hopefully that makes sense. Open, high, low, close. Now this works on all time frames. For instance, we are now looking at the monthly candle using the daily chart as the lower time frame candles. So if we're going to move higher, we want to see what? Open, low, high, close. And you can see there we got our open, low, high, close. Then we open up the new month and we make a move higher at the start. And then that leads us into our next candle type. So let's go back to the PDF. So the next candle type I focus on is a reversal candle. And so what this looks like is we have an open, a high, a low, and close, or an open, low, high, close. And what do you notice about this wick relative to the body? Well, the wick is larger than the body. You notice how with the directional candle, our wick was smaller than the body. With the reversal candle, it is different. So what's happening on the lower time frames here? Well, we open, we're making a move higher, so it's looking like a directional candle up. And in this time period, we went higher, and then price reversed all the way down here to then close. So price went up, then reversed, or made a reversal candle. Similarly, open, went down, looking like a bearish directional candle, then reversed to make a high close. So if we look at this on a lower time frame, open, made a low, was looking like expansion down, price reversed to then make a high and close. So open, low, high, close. With a bearish reversal candle, open, high, low, close. Was looking like a bullish directional candle, then price reverse. So when you see a wick, that means on a lower time frame, price went up and then down. Let's hop into the charts and go over a few examples of these. Now back where we left off with our previous example on CL daily chart, looking at the monthly open, high, low, close, what do we notice about this low here? We barely made a low, right? In the single daily candle, we just kind of moved higher. So we have an open, high. Let's see what happens. So if you notice what happens is we move higher and then price reverses to go lower. We have an aggressive move out of a range and an aggressive move back into a range. Let's see how this month closes. And you can see we close as a bearish reversal candle. What happens at the start of the next month? We get an expansion move down off of that reversal. Now, if we go back and replay, what do we notice about our first example in the video? This candle looks a lot like that monthly candle, right? Where we have an expansion up, price then moves open, high, low, close, forming a bearish reversal candle. So then I can anticipate what? A bearish directional candle after that. So if we go down to the lower time frames here. So now down here on the lower time frames, if we watch this candle form, you can see it's pretty choppy. But what happens is price moves higher, we make a high, and then the most important part here is we move lower, and where do we close? We close back down here, making a bearish reversal candle. So you can see here, price went higher, reversed, and then closed below its opening price. So let's take another look at this example. What happens as we near the New York session? We get an aggressive move lower, right? So right now it's looking like open, high, low, close, right? But this is where directional bias is important, because if I'm bullish and seeing an opposing move down in New York, I'm thinking a New York reversal to make a what? Bullish reversal candle. What happens here? We make a low, we get our change in the state of delivery, and then where do we go? We go higher. So you see how this candle looks? Open, low, high, close, right? Where we finish off. So let's go back to the PDF and talk about the last candle type I look for. Now the last candle type I look for is an indecision candle. And what does that mean? It means that price opens, makes a high or a low, and then closes very close to the opening price. So you can see how we have a longer wick on each side, and the body is fairly small. That means throughout this time period or candle, so for instance, if this is a daily candle, it means that price really didn't go anywhere through that day, right? Because it opened and closed relatively to the same price. So we look at an example of a bullish one right here, make a low, make a high, make a low. But the most important things, we open and close right next to each other. So there's no real direction in the market. And similar thing here with a bearish indecision candle. The open and closing prices are relatively close to each other, making a very small body or not much direction in the market. Let's go into the charts and look at a few examples of these. So here we are on a gold 15-minute chart, and we'll be watching the daily candle. You can see as we play this through, we don't really do a whole lot, right? We're chopping around. What are we making? A little broadening formation. And what happens? Well, we just sweep out both sides of the range. So right now, we let this come back and close. Where do we return to? Right around the opening price, right? So larger wick on each side and opening and closing near each other. So what does that show? There is no direction right now in the market. It's just kind of sitting around. So here in our next example, what do we notice about the previous range? Well, we had a very large previous range. See that? 500 points on NQ. So with a lack of news or volatility following a range that is very large, a lot of times we get an indecision candle. You can see there is no real movement in the market. And what happens is we just come and make a high and a low. Price can't go anywhere, and we will end up closing right around the opening price. So if you know what a seek and destroy looks like, or a broadening formation, we'll just kind of get that pattern, right? So price will take external, go back to equilibrium with range. So here we are on CL daily chart, and I just wanted to explain a few things. We went over the 3 candle types, and generally I don't like to see more than 3 of those candle types in a row. So if we're getting 3 days of expansion or a directional move, then I like to see a different candle type or a reversal, consolidation. So let's see. So you notice here, we get 3 days of expansion, right? So open, high, low, close, open, high, low, close, open, high, low, close, right? So the following day, what happens? Well, what do we print? We sweep out previous day's low and close inside, but more importantly, open, low on that sweep, make a high, and then close. So what are we printing? A bullish reversal candle. So do we see a reversal? Well, let's see the next days. Open, low, high, close. We're closing over this previous bar. You remember my daily bias video. Open, low, high, close, closing over. Now, do we get a third day? We do. Open, high, low, close. Now what happens on this next day, following 3 days? This isn't great expansion, but 3 up close candles. We get a consolidation, right? So you can see how the opening price and closing price are right next to each other. See what happens? Well, now we sweep previous day low into a fair value gap. And what do we notice about this candle? Open, low, high, close. And what is that forming? A bullish reversal candle. And in this case, it's reversing from the retracement to then continue higher. And there we get a move higher. So hopefully that shows you how you can add it to other concepts, just the understanding of open, high, low, close. And if you go down to the lower time frames, you kind of already know what they look like. For instance, here I know we opened, we made a high back at equilibrium of the previous day. Then from there, we found expansion lower, and then we closed in the lows. Here, we made a move higher to then go lower and close. So you can kind of start to picture the lower time frames just understanding the open, high, low, and close. Now I hope you found this video helpful. If you did, please consider liking and subscribing, and I'll see you guys in the next one. Have a good one.